El Salvador is very reliant on remittances. And so basically, if someone gets remittances, someone in the U.S., like a relative in the U.S., sends them money. It goes through something like Western Union, so they pay a pretty high fee. There's only a handful of places that they can go to in the country in order to get that money. So they take a long bus ride in order to get that remittance. Usually, there's some gangs that, for example, would patrol those areas because they know people are coming out of those places with cash, and so you kind of, you risk, getting mugged. And so basically, this is an application of software to that problem where you can say convert dollars to Bitcoin, send over the Bitcoin, convert it back into dollars, or now with this recent law, it can just stay as Bitcoin and be spent as well. And so basically, the government is as by making it legal tender, there's no taxes on Bitcoin transactions. It's not like you're going to pay capital gains taxes. In addition, it basically increases the number of places that would accept it. Now, those merchants could just convert Bitcoin back into dollars right away if they want, because basically the wallets that they're using allow that to happen. And so, I wouldn't view it as a money laundering issue because, for example, multiple analysis firms, including firms that work for law enforcement to kind of track these blockchains, they generally find that overall illicit activity on blockchains is actually a very small percentage of the transactions there. And that's because if you think about it, I mean, doing shady, illegal business on a immutable public ledger is generally not the best place to do it. Generally, cash is still the best place to do illegal activities. And so, I wouldn't view it from that lens. I think instead they're viewing it as El Salvador is trying to attract, say, crypto type companies, Bitcoin companies, trying to attract maybe wealthy Bitcoiners, maybe trying to reduce the fees it's paying on remittances. And so, it is a troubled country. And so this is kind of a high risk, interesting way to, I think potentially improve their standing. But it does come with implementation risk and risk of being, kind of excluded, in their efforts by the IMF and other organizations.
Do you think Bitcoin is in itself even a reliable form of payment? Because in a country where many people don't even have bank accounts, imagine going to the grocery store and buying, a bunch of bananas for X number of Bitcoins, and then the next day it doubles, and then the next day it halves. Wouldn't that be very frustrating for somebody in a developing nation?
Yeah, so potentially. The challenging thing there is that because they're underbanked, that's where, it's sometimes ironically easier to get a cheap smartphone than get a bank account. And so when you have like say a free Bitcoin wallet on a cheap cell phone, that actually can make transacting easier in some cases. But yes, there is volatility risk. And so a lot of them, for example, can convert back to dollars if they decide they don't want to hold large amounts of Bitcoin. It's one of those things, it depends on what country you're in. So El Salvador is dollarized, and so they generally have that access to that stable dollar, whereas many other countries, for example, their local currency is in some ways more volatile than Bitcoin, usually to the downside, whereas Bitcoin at least has upside and downside volatility. And so it really kind of depends on what market. Now, the challenging thing for El Salvador is that, they're basically reliant on dollars. They're basically reliant on, say, a foreign centralized source of those dollars, right? So they're reliant on remittances. They're susceptible to, say the United States devalues its currency by doing stimulus. Well, El Salvador is not really benefiting from the stimulus, but they are being impacted by the devaluation. And so, they basically have a couple different incentives there, I think, to try to diversify their monetary base to some extent.
Do you think it's ever possible to see El Salvador or any other country start issuing sovereign debt in Bitcoin or cryptocurrencies?
So it's possible. I mean, that's one thing that essentially emerging markets do now is that they issue debt in dollars, which for them is like a hard money because they can't print dollars. And so that's something we see in emerging markets for decades now. We also see this precedent, for example, in India. India has bonds that are linked to gold, right? So it is possible you could see a country do it in Bitcoin, but it'd be a risk, right? Because if, on one hand, if Bitcoin goes down, that would benefit the bond issuer. On the other hand, if, imagine if you issued Bitcoin related bonds a year ago, right? When Bitcoin was like under 10,000 and now it's, over 30,000. At some point it touched over 60,000. You would have default risk from Bitcoin going up that rapidly. So the only way it would make sense if somehow it was tied to, say, Bitcoin related revenues. And so some people, for example, floated the idea that because El Salvador is potentially interested in say, Bitcoin mining using its geothermal energy, they could potentially fund some of that capex with Bitcoin linked bonds, but at least it would be tied to Bitcoin based revenues. So, but unless you structure it like that, it'd be quite risky to do. Yeah, anytime you're dealing in multiple currencies, you have to be aware that when you issue debt in one currency, but your revenues are either completely or partially in a different currency, then you have that major risk. And especially when you add on to the fact that Bitcoin has very high volatility, that is a significant risk. And so,
Yeah.
I certainly wouldn't recommend people have their revenues in dollars and then their liabilities in Bitcoin. Now you
Makes
could,
sense.
say if Bitcoin collapses, you could have a nice windfall there, but you're also vulnerable to Bitcoin going up 5 or 10x in the next,
Okay.
decade and then getting messed up. In most of us, we live in, developed countries, and so we generally have a reasonable degree of trust in our financial system. Our equities and our bonds are held by institutions on our behalf. Now, but that's never like a risk-free proposition, right? So many investors prefer to have some of their assets held in things, being able to control it themselves. So it could be collectibles and things like that. But if they want something more liquid and fungible, there's only a handful of things that you can hold. So physical cash is one example, but of course that gets devalued over time. So you generally don't want to hold large and large amounts of physical cash. And so that mostly leaves precious metals and cryptocurrencies, where basically you have this asset that can be, self-custody. So you're not relying on another institution to hold it for you, and you can exchange it with a third party, again, without kind of relying on some sort of centralized, say, banking system to basically allow that transaction to go through. And of course, gold and Bitcoin shine in different areas, right? So, I mean, obviously, if you're say the power goes out, like say Puerto Rico was impacted by hurricanes years ago, and so for example, having physical cash or say physical silver coins would have been very helpful in that type of environment, whereas say Bitcoin would be less useful. On the other hand, if you're trying to transact internationally, or if you'd like to say you're in one of those countries that has some sort of political strife and you want to leave, basically it's very hard to get say gold through an airport, whereas you can memorize a Bitcoin seed phrase, you can have Bitcoin on your phone. It's far easier to basically get Bitcoin out of a jurisdiction if you were self-custodying it to begin with. And so basically, self-custodying assets is a way that investors around the
Mhm.
world can basically de-risk some of their assets. And of course, certain jurisdictions that ends up being more important than others. I mean, if you're in person, then that transaction can work very well and very cheaply. If you were trying to transact, at a distance with gold, it'd be one of the worst ways to do it. If you were trying to transact across borders, or try to transact basically at
Good
long
point.
distance e-commerce. And
Yeah.
so different tools for different purposes.